I think it's still early in this trade. I mean, I think a lot of these gold mining stocks are going to 5 or 10x even from here. Maybe it'll take another 5 years to do it, or I don't know, but that's where they're going to be, because I think gold is not going to stop going up because the dollar's not going to stop going down. It's not going to stop at 5,000. It's not going to stop at 10,000. It's going to go higher. I mean, it could go to 20,000. I mean, who the hell knows? But you mentioned gold's at 3,850. I mean, that's $150 less than 4,000. I mean, think about that. $150 and we're at $4,000 gold. This is not something that should be dismissed. When the price of gold is doing this, it's not like it's, the price of cheese, or something like that, or lumber or soybeans, because this is not about, we got a bad crop. There was a drought, there was a flood, or there was just a big increase in demand for, corn or whatever. This is gold, right? It's not like Americans or everybody else all of a sudden wants a lot more jewelry, right? There's not a run on the jewelry stores. Gold is going up because of its monetary properties. It is a monetary metal. And when gold is rising like this, it is a warning sign, right? It is the canary in the monetary coal mine. And when you see this happening, it is a warning that something bad is happening. And, the biggest buyers of the gold are foreign central banks. Now, don't you think they know something? I mean, they're the insiders in the monetary system, right? And they're buying gold as fast as they can. And it's really like they're selling dollars, right? These are insiders that are dumping dollars, and they're dumping treasuries, and they're buying gold. Why are they doing that? Why are they foregoing the yield on U.S. treasuries to hold gold and have no yield? That tells you something. And in fact, Wall Street is finally recognizing this. A week or two ago, Morgan Stanley tweaked for the first time the 60-40 portfolio, that sacrosanct 60% stocks, 40% bonds. They decided to cut the bond portion in half and make it 20% bonds, 20% gold. Now, I've never seen that in my entire career. I'm 62. I started at 24 in this business as a licensed stockbroker. And during all those years, almost 40, right? I've never seen this. I was always like a lone voice in the wilderness on Wall Street, telling my clients to buy physical gold, right? Now, all of a sudden, more, wirehouse firms, institutional investment banks are for the first time saying you need to sell bonds and buy some gold because, there's a lot of inflation that you need to hedge. So this idea of 2% inflation, that's gone. Not that 2% was ever the holy grail or anything. I'd rather have no inflation than 2%, or I'd rather have prices go down 2% than up 2%. That's better, right? I mean, I want to buy stuff cheaper. I'd rather pay less, right? But now it's going to be way more than 2, because the Fed is cutting rates when inflation is at 3%, even the way they measure it, but it's on an upswing. So it's headed higher, yet they're cutting rates. So that tells you that the 2% target is out the window. What's the new target? Who the hell knows, right? They've never fessed up to one, but it's a lot higher. And so the world, I think, is de-dollarizing, and I think this is a big problem for the United States because America uses the dollar as a crutch. Our economy is so screwed up in a way because of the dollar status. We've been able to live beyond our means for decades. We can consume without producing, and we can borrow without saving. And that's made possible by the dollar reserve status. So the world is willing to manufacture goods and let us have them for dollars. and the world is willing to loan us dollars so that we can have lower interest rates. And, they're willing to buy our stocks to prop up our markets. But I think all that is going to be reversing. And I think this whole house of cards economy is going to come toppling down. And you're going to see a big increase in consumer prices and long-term interest rates in America, and a very substantial decline in the standard of living for most Americans. First of all, if half of the money in bonds at Wall Street firms went into gold, who the hell knows how high the price would go, right? I mean, first of all, it's going to impact bonds. Now, the bond market is a lot bigger than the gold market for now. Eventually the gold market might be bigger when the price moves up a lot more. But, what Morgan Stanley was effectively doing is putting out a sell signal on treasuries, telling its customers to sell treasuries. So that's going to have an impact. If more Wall Street firms want to sell treasuries, the central banks are selling treasuries, and the Treasury is selling treasuries like they're going out of style, which they are, but they're selling more treasuries than ever. Our deficits are trillions per year. So at a time where the U.S. government is selling more treasuries than ever before, the buyers of treasuries don't want them. That's why the Fed is going to have to buy them. The Fed right now is selling treasuries. They're still doing quantitative tightening, but I think they're going to be forced to reverse that into quantitative easing, and that's going to send inflation through the roof. And I think the gold market already sees that, or investors, and that's one of the reasons why they keep selling dollars and buying gold. Wall Street starting to move customers towards gold is going to be a big deal. And I think not only are they going to be moving their customers out of bonds into gold, they're going to be moving customers out of Bitcoin into gold. Because I think a lot of Wall Street, even though they haven't been big promoters, I think a lot of the discount firms that have set up a Bitcoin ETFs, they have enabled a lot of investor money to flow into Bitcoin. And I think a lot of the money that went into Bitcoin ETFs came out of gold ETFs and gold mining stocks. And I think those investors who got frustrated with gold's lackluster performance and the weakness in gold stocks, and who decided to move their chips over to Bitcoin ETFs, I think next year, when they look back at this year and they see that gold stocks more than doubled and Bitcoin maybe was flat to lower, it's up on the year right now, but it could dump in Q4. I think you're going to see a pretty big exodus of that money out of the Bitcoin ETFs back into gold and gold equities. And not only is that going to help push gold and gold equities up, but it's going to crash Bitcoin even more, because a lot of the money that went into the Bitcoin ETFs ain't coming out, right? It's like a money roach motel. You could check your money in, but you can't check it out, because when you try to sell, the market crashes and there's no one to sell to.
No, I get that part. Do you see a trigger looming, though, that could push investors in that direction? Of course, the year-to-date performance for gold is staggering. It's close to 40%. It's the best year. We've been reading it everywhere since 1979. Q3, best quarter on record, apparently. The superlatives are extreme, of course, that speak for gold. But what could trigger that change in momentum? We've seen, like, the S&P investors, they were chasing the 25% yearly gains, and they still haven't really exited the main market, right? So we need a trigger.
I remember in early 2024, and I was critiquing this on my podcast, but you had a couple of firms basically downgrade Newmont and Barrick to sells. And they said that there's no more upside in gold. Gold was at 2,000, and the analysts were saying, look, gold is pretty much fully priced here. It's more likely to go down, and so there's no point in buying these gold stocks. And of course, since then, the price of gold has almost doubled. It's almost 4,000 now, and these mining stocks that they put sell recommendations on have more than doubled since they put sells on them. So Wall Street did not anticipate this trade at all, and they're only now starting to get positions, and that's why I think this move has got so far to go. I don't think there's going to be any substantial pullbacks. There'll be pullbacks for a day or two, but I don't think you're going to get, 10% drops in gold, or even, even 3 or 4% is going to be tough, right? Because there's so much money now waiting to come in that any dip is going to get bought pretty aggressively. And that's what I've been telling like my customers at Shift Gold. I just keep saying, stop waiting for a pullback. You're going to be waiting forever. And then you're going to end up buying at a much higher price. Just buy. You want to buy gold, buy it. You want to buy silver, buy it. Don't get cute. Don't try to get a pullback, because even if you get a pullback, chances are it won't be enough and you'll miss it. By the time you buy it, it'll be higher. So just buy it, because what you really need to do is you're getting out of the dollar. The dollar is a sinking ship. The only unknown is how fast it's going to go all the way to the bottom. But we know that it's sinking. So the sooner you get off, the better. And the longer you wait, the higher the water level is going to be by the time you get off. So you just got to buy. And the same thing on these gold stocks. They've doubled. And some have tripled, But if you look at where they are in relation to where they were 10, 20 years ago, a lot of them are still a lot cheaper. But gold is much higher than it was back then. It's not just that the stocks are down. The value of the gold that they own is way up. And I think the earnings on these gold mining stocks are just going to explode. I mean, nobody has even put a pencil to a piece of paper to determine how much money these gold companies are going to make at $4,000 gold. And of course, we're not going to stay at $4,000 gold. Next year, we'll be at $5,000 gold, maybe $6,000 gold. So, these companies are just going to make a ton of money. And, Wall Street is just like waking up to this, I mean, there is no Mag 7 in the gold stocks, right? We don't have any anachronisms. There's not, it's not like tech, right? Everybody's all over tech. So, the gold stocks are going to be, like that. I mean, at some point you're going to start to see, retail money coming in, meme stock money and stuff like that. But I mean, that's probably years away. It's the serious money that's coming in now. They missed the bottom. And the only reason I got the bottom is because I bought way early. It's like, because I saw this coming from a mile away. I prepared too soon. But so, I caught this entire move because I was already long, but I added to my positions back in the first quarter of 2024. I bought more gold stocks when they put these sell recommendations on. And then I bought more gold stocks for myself after Trump won at the end of last year and early this year when they dumped them. The market, they went down like 30% because everybody thought Trump was going to be so great for the economy. Hey, why do you want to own gold stocks when he's going to make the economy great? He's going to pay off the national debt and all this crap. I just bought, and I was urging all my clients to just, put more money in because I knew that this was a bunch of BS. And in fact, we had another opportunity right after Liberation Day. There was an initial sell-off of gold and silver stocks in particular. Silver stocks got crushed. If you'd have bought Liberation Day lows, people talk about the snack back. These silver stocks have tripled off those Liberation Day lows.